Why did the Ethereum price rally after the Shanghai upgrade? Why is the expected selling pressure in Ethereum absent? If you're interested in knowing more about this, please keep watching. Bybit and ETH partnered to host a new promotional event. After completing Know Your Customer, KYC, and a $500 deposit, you will receive a $1,000 worth of Ethereum position. This is indeed a generous offer. Plus, it's unprecedented. Besides, you're very welcome to visit my crypto quantitative platform and try out several trading strategies. Let's take a look at this. If you want to get a free Ethereum position worth $1,000, simply click this link and you'll be directed to the page. After that, you can choose to collect either a long position or a short position. Of course, the position is given in terms of USDT because not everyone is interested in coin margin futures. You just have to sign up by completing KYC and making a $500 deposit. Then wait for 5 to 10 minutes as the system needs to process some data. Refresh the page and you will receive the position. Yes, that's easy. Previously, it took you some time to wait for the trial fund, and that might cause you some annoyance. Therefore, we would like to present you with the position this time. Make a $500 deposit and complete KYC. You can then claim your Ethereum USDT perpetual in either a long position or a short position. This is really a great and unprecedented promotion. Alright, let's take a look at the on-chain data of Ethereum. Recently, due to the Shanghai upgrade, I woke up early this morning at 6:30 a.m. At around 6:30 a.m., I woke up to check on the market, and there wasn't much fluctuation shown. So, I went back to sleep. Speaking of Ethereum, I have some concerns regarding the staked ETH unlocking after the Shanghai upgrade, which might lead to heavy selling pressure in the market. In the previous videos, I did predict that there would be one. However, regarding the impacts of the unlocking, we have to wait until after the Shanghai upgrade is completed for a clearer view to be shown. Well, the unlocking of the staked ETH this time is around 1% of the total supply. To what extent can this 1% contribute to selling pressure? I think it surely will cause a certain pressure, even though the unstaking really takes up 1% of the circulating market cap. However, the depth of order book and market cap show a certain gap in differences, and this explains why FTT tumbled soon after FTX collapsed, even though FTT's market cap was high. This is because the liquidity and market cap in the secondary market can't be as good. That's why I reckon selling pressure could be created. But it doesn't seem so. Let's look at the on-chain data now. In the on-chain data, ETH deposits represent staked ETH, while withdrawals represent the amount of unstaked ETH. You can notice that after the Shanghai upgrade was completed, traders were allowed to withdraw their staked ETH, and there were indeed many withdrawals. After the withdrawals, the node validation recorded more withdrawals than deposits, meaning to say the withdrawals would cause a small wave of selling pressure in the market. So, if we look at the current situation, as the data shown here, we can at least deploy short positions or bearish positions in terms of derivatives or other products to avoid the risks. As you can see, the green bar displays the amount of staked ETH. You can notice that the amount of staked ETH is much larger than the withdrawals. In other words, the speed at which liquidity is decreasing is way faster than the speed at which it is increasing. Therefore, selling pressure in Ethereum's market has disappeared. In fact, a gradual deflation is happening because many Ethereum are circulating in the secondary market and being turned into staking nodes. This is actually a very good thing for Ethereum. Besides, in the long run, it's a bullish bias to the Shanghai upgrade, as it encourages many institutions, retail investors who stake, aren't their target audience. If the institutions stake Ethereum, it will take up a significant proportion. Thus, the circulating ether can be reduced, and the price will naturally rise. But what I'm most concerned about is not present, but what will happen 3 to 4 days after the Shanghai upgrade. Which dates fall 3 to 4 days from now? Let me mark the date out. Why do I care about this period? This date is when the Shanghai upgrade launched, right? It's 6 a.m. according to our time zone. Let's move backward to 3 to 4 days later, around the 16th or 17th. At this period, Ethereum is expecting maximum selling pressure. I keep mentioning the date after 3 to 4 days because of all sorts of things, including protocols. It takes some time to unlock the staked ETH. Every process needs time. Hence, there will be a delay. About 3 to 4 days later, the largest selling pressure will be shown. It doesn't occur instantly, but 3 to 4 days later. By then, we shall see what happens to Ethereum. If you want to deploy positions, whether it's long or short, you're welcome to sign up for a Bybit account. Make a $500 deposit and complete KYC. Then you can collect the Ethereum position worth $1,000. This is indeed a generous promotional event that's never been launched before. Besides, what does collect position mean? You can straightaway withdraw the fund once you make a profit without any problem. Let's switch back to here. Someone may ask about the annualized rate of return of stacked ETH, roughly 5.9%. We will check on another statistic later. Currently, the ratio for staked ETH is around 14.5%. I expect the rate to rise to between 30% to 40% in the future. In the past, staked ETH couldn't be withdrawn, which created a liquidity problem. I'm clueless about what trading operation you've done. From now on, traders are free to stake and withdraw, and that will encourage more Ethereum holders, and even those who don't currently hold an Ethereum position, to buy and stake. Thus, it will help reduce Ethereum circulation, affecting the price to rise. Besides, Ethereum has many other practical uses. Alright, let's switch to the next statistic page. On this page, it shows the staking APR of Ethereum, roughly 5.06%. Perhaps it doesn't seem high, but it's considered stable in terms of the annualized rate of return, and it's in the form of Ethereum. I think this is pretty good. A pretty good rate. As you can see, the yellow bar represents ETH unlocked value, while the purple line displays the staking APR. Alright, let's take a look at the secondary market and the Ethereum price. Speaking of which, I've sold some Ethereum positions during the earlier period here. Concerning the current market, is that the correct decision to make? I can't tell as of now. It can only be answered after some period later, because the unlocking of staked ETH doesn't occur all at once. You may wonder why the market didn't crash right after the Shanghai upgrade. It requires some time to resolve the issue for sure, as the development team must have predicted the likelihood of a crash. So, the unlocking will proceed linearly, slowly releasing a little bit at a time. There must be restrictions in place to protect the traders on the secondary market of Ethereum. Look at this period. Here, I personally sold some of my Ethereum positions. I wonder how you traded yours. For example, in terms of short selling, you must exit the market at the breakout here. As you can notice, for this breakout, the price didn't break through this resistance level during the last 3 tests before. However, for the 4th time, the price action broke through, accompanied by a surge in trading volume on the Ethereum market, regardless of what derivatives positions you hold. When you see this breakout, it's better to avoid the risk, because there are no bearish news releases after the unlocking of staked ETH. I'd say that the market has already priced in the news. We shall wait and see the selling pressure form when the unlocking happens. 3 to 4 days from now, the strongest selling pressure is going to occur 3 to 4 days later. Perhaps the price would fall back down at this breakout. I wouldn't go long. I won't do that, because we're expecting a small bearish news. Not a big one, a small bearish news very soon. So, you can take this as a reference. As for Ethereum, I think there will be an important support level existing here. Right at here. The trend line has supported the price several times before, and the pattern develops very perfectly aligning with it. If the price action breaks below the support, I think there will be a huge room to fall. Let's switch to the exchange rate of Ethereum to Bitcoin. During Ethereum 2.0, the exchange rate slumped. Unexpectedly, the exchange rate rises this time. It actually rises. This also shows that the market has a slight bearish sign, right? Once the bearish news is released, the Ethereum price will start to rise. But I'm still dubious about whether this can continue. It's highly possible. Then in the next 3 or 4 days, to a couple of days later, the restrictions of Ethereum on staking will loosen. By then, the market will encounter selling pressure, and the price falls further. However, the range difference won't be big. We shall see how the market will develop later. Lastly, let's look at the Bitcoin market. Speaking of Bitcoin, my idea is still the same. We just have the CPI announcement the day before yesterday. Right. It's on the day before yesterday. Let's look. At this point, where the breakout is shown, is it a real one? That's debatable. As of now, I don't think this is a confirmed breakout, because this breakout should be a strong one. But do you think it's a strong breakout? No, it's not. Besides, the current CPI statistic announced to be bullish. This means that the US government successfully controlled CPI by pressing it down. This is very good for creating a support level for the future uptrend. But you can see that the Bitcoin trend hasn't shown much momentum. And in the past few days, I suppose it's yesterday. Hold on. It's yesterday. Sorry, it's last night. Last night, the CPI was announced. It was bullish news, and the price rallied. However, the price fell back down before long. I think this is not a good thing for bull positions. For the bull position, when such bullish news comes out, the market should be very active with the price action rallies. However, we notice that the selling pressure is heavy at this period, as the price is pressed against here. This is not a favorable situation. Next, let's take a look at this trend. At the breakout, during the previous period, there has been a surge in trading volume and a strong continuity in the candlesticks. So that's a real breakout. Well, the current breakout breaks through a little, and the trading volume is exhausted. At this point, a slight breakout was shown, and the trading volume was exhausted. So the authenticity of the breakout still requires further verification. I'm still skeptical about the current breakout and uptrend. Alright, thank you. You're welcome to like and share my videos, and subscribe to my channel. Turn on the little bell button to show me your greatest support. Also, please collect $1,000 worth of Ethereum's positions reward given by Bybit. Thank you so much. Bye bye.